If you see in any segment, any sector in India, whether you talk about the private banking, the largest private bank in India, or you look at, the FMCG sector or the auto sector, you see any of these entities in India are actually predominant stakeholder being a foreign investor. That clearly tells you that accessing Indian markets, I'll talk about the equities first, is not really difficult, both entry and exit. And over the years, the kind of wealth creation in dollar terms for the foreign investor in the Indian markets has been one of the highest ever. If you look at the fixed income bond markets, clearly there were reservations over the last three and a half years. There has been considerable progress. If you look at the FAR, which is the fully automatic route of bonds, tells you that there is unrestricted access, and that clearly was a precursor to actually get included in the emerging market index. So clearly looks like every walk the talk from every angle seems to be in the works, and between now and June 2024, the intent is that you see many more such procedural issues getting resolved to make way for a more durable inclusion.
Okay, fair enough. I do want to get your thoughts in on how oil and the rupee may spoil the story for India's fiscal position, and whether or not that would be a bit of a problem. I know that for India's trade balance that would be an issue, but how does that extend out to what the government may have to do in terms of tackling these challenges, because it also then trickles down to growth?
No, absolutely. Your observation is bang on. While we have, I would say, a trilogy of positive factors, which is favorable macro, strong corporate earnings, and very, very buoyant foreign and domestic flows, I think the clear near-term venom is coming from the fact that oil is clearly on the boil. And for countries like India, which are dependent on oil imports, it is a double whammy in some sense, because this comes alongside a very strong dollar, which means the general emerging market currency pack, including the INR, could be under near-term pressure. So I think the balance of trade may still not be completely distorted if this resolves for itself maybe over the next month or so. But in the immediate, this clearly would mean more volatility in the markets, and valuations obviously are quite perched on the higher side. So brace for near-term volatility, given the fact that specifically oil, among other commodity prices, seems to be unnerving the investor sentiment.